Hi there, welcome to kneppyinvests. We are in the depths of the September quarter reporting season, 2 weeks in already, and we'll see a flurry of these Appendix 4Cs and 5Bs being released over the next 2 trading weeks. The week of October 11 to 15 was quite interesting because we did see a few companies release their quarterly report a little bit earlier than they usually do. And I think the main reason they decided to release their reports earlier was because they had quite stellar results for the quarter. And I'll actually touch upon that in a few slides. And this definitely holds true for the company I'll be featuring in this video, Dynamic Drill and Blast. So I only did their June quarterly report not that long ago. So they did release their September quarter report about 2 weeks earlier than they have done in the past. And those numbers in regards to receipts and operating cash flow increases from the June quarter look quite gaudy, look quite huge, but there is a reason behind that, and it has to do with an acquisition they made. Usually when a company makes an acquisition, it is an acquisition of a smaller company. Dynamic Drill and Blast did it a little bit differently. They actually acquired a bigger company, and you can see that by comparing their June quarter results and the September quarter results, and we'll do that in this video. The drilling space is highly fragmented at the moment with a lot of players in the sector. I would not be surprised to see further acquisitions and mergers. So I wouldn't be surprised at all to see Dynamic Drill and Blast make further acquisitions as a growth strategy management have decided upon. Or I wouldn't be surprised to see Dynamic Drill and Blast be acquired themselves. So for full disclosure purposes, I am a shareholder of this company. And one of the reasons I actually decided to buy into Dynamic Drill and Blast is simply because this is a highly fragmented sector. This is the 5th September quarter Appendix 4C or 5B I have done so far for the quarter. The first 4 videos have been done on XREF, Self-Wealth, Phoenix, or Bubs. If you are interested in any of those companies, or maybe you'll just like another idea, I highly recommend having a look out for those videos that I've released in the past few weeks. One thing that really stood out to me during the trading week of October 11 to 15 were the amount of companies that did release their September quarter report a little bit earlier than what we are used to. And I had these thoughts that there is potential. The reason they did release these reports earlier is because they were good reports and management just wanted to get these reports out there to the market. And in fact, during the trading week between 11 and 15, we have about 8 companies that released their quarterly report quite a bit earlier than the June quarter. And that includes Capricorn Metals, which I don't know anything about. They released their September quarter report 19 days earlier than the June quarter. Bubs and Dynamic Drill and Blast released their quarterly report 17 days earlier. Carbonex 16 days earlier, Zuno 14 days earlier, Revison 13 days earlier, and Western African Resources 12 days earlier. So the other thing I did is just look at the share price, how it performed from the day they released the September quarter report and then the days after, and we have seen significant share price rises in all these companies. For instance, Capricorn Metals has increased 16.5%, Bubs has increased 32%, Dynamic Drill and Blast 20%, Zuno 16.5%, Revison 10%, and Carbonex 3.8%. However, Carbonex was as high as 8% higher than the day before they released September quarter. So there is something happening here. There is a pattern of companies releasing their September quarter report earlier than what we are used to. And I think the main reason behind that is management have seen the results and just want to get the results out there as soon as possible to the market. On to Dynamic Drill and Blast, and these are some facts in regards to this company. If you didn't know, Dynamic Drill and Blast is all about drilling and blasting. So they're a mining services company. The reason I have they were founded in 2011 or 20 is an odd one. So DDB Holdings Limited, which is what Dynamic Drill and Blast is called on the ASX, was incorporated on the 13th of May 2020 as the parent company of Dynamic Drill and Blast Pty Limited, which was founded in 2011. So the ASX company was founded in 2020, but the underlying company was actually founded in 2011. Dynamic Drill and Blast listed on the ASX 6th of August 2020. The managing director is Mark Davis. He has a 7.5% stake in this company. And the market cap for Dynamic Drill and Blast at 50 cents is 57 million. And the ticker code is DDB. Don't be surprised if I mix that up with DBB for some reason. I am having that trouble with this company. Before we have a look at the quarterly reports, particularly comparing June quarter to the September quarter, and there is big differences there, I just want to go back to look at the financial year 21 results. And just keep in mind the revenue and operating cash flow for their full financial year. Revenue was 22.5 million in operating cash flow, positive 2.6 million. Both of those were up significantly from financial year 20. So Dynamic Drill and Blast was a growing company from financial year 20 to financial year 21. They're also profitable by 1.6 million, and they do have net cash of $800,000. Some of the valuation metrics: EV to operating cash flow 18.5, PE ratio 30.6, and price to sales ratio 2.2 seem a little bit high, but that was because a lot of these numbers were pre-acquisition. But if we look at some of these numbers post-acquisition, you get completely different numbers. And that will make sense when we look at or compare the June quarter results to the September quarter results. In the June quarter, Dynamic Drill and Blast had receipts and customers of 5.8 million, and we're only operational cash flow positive by 683,000. Nothing too exciting when you do look at the June quarter results. And market didn't really get excited about their June quarter results either. They did begin the quarter with $3.3 million of cash and finished with 8.7 because of a capital raising. And the reason they did a capital raising was because of the acquisition. Also $3 million of loans, and they spent $4.1 million on capital expenditure. Now, just keeping some of these numbers in mind, so $5.8 million of cash receipts and operational cash flow positive 683. Just keep those numbers in mind as we turn our attention to the September quarter. Dynamic Drill and Blast did make an acquisition, and that acquisition, or the results of that acquisition, came to fruition in the September quarter. And we can see that with the receipts from customers growing from 5.8 million to 21 million. Again, Dynamic Drill and Blast made an acquisition of a company that was actually larger than themselves. Not only did the receipts grow by a significant amount from 5 million to 21 million, the operating cash flow also grew from 683,000 to 3.9 million. So a significant change in the financial state of Dynamic Drill and Blast because of this acquisition. I think it's called Orlando something or other. They began the quarter with $10.3 million of cash and finished with 9.7. And the reasons why the cash came down, even though they were operational cash flow positive, was because they made that acquisition, some more cash, $4.8 million. They spent $3.2 million on capital expenditure, and they also raised some more money, $3.8 million. When you add everything together, Dynamic Drill and Blast still has $9.7 million of cash moving forward. One thing I like to do for all companies that do release Appendix 4C is just to see the cash receipts history through time. I prefer to see at least 8 quarters of history before determining if there is any trend in receipts. I do like to see upwards trend. Unfortunately for Dynamic Drill and Blast, we only have 5 quarters of history. Not only do we only have 5 quarters of history, because of this acquisition of Orlando, we have seen a massive jump in receipts from the June quarter to the September quarter. So really can't take anything away from this. Didn't even bother to calculate the compound quarterly growth rate in receipts because of this acquisition. The main thing here is the company is now more operational cash flow positive, and if they can maintain this momentum moving forward, with a market cap of only $50 million, this company is looking quite attractive at current prices. As we turn our attention to the daily chart for Dynamic Drill and Blast, going back to when they listed on the ASX in August 2020, the market hasn't really been that excited about this company. And we know the market isn't that excited because there hasn't been a lot of volume and the share price has been drifting down over the past 10 months. And whenever you see the share price drifting down on a fairly low volume, that just tells you there's not a lot of interest in the market. It can be quite frustrating as a shareholder, and I am a shareholder of Dynamic Drill and Blast. The one thing that has been perking me up is just the knowledge that this acquisition of Orlando should be really good for the future fortunes, financial fortunes of this company. We have just seen that in the September quarter, and the market has got a little bit more excited about this company after the release of their quarterly results. The one negative thing, even though share price has jumped up a fair bit, the one negative thing is probably a lack of volume. I would have liked to see more volume. In fact, one of the trading days, there was no trades at all. And that can be an issue for a company like Dynamic Drill and Blast. I think what the market might be waiting for is confirmation about the fortunes of this company. And I think what they really want to see is the December quarter results, and even possibly what's the next quarter? The April quarter results, March quarter results. And until we get confirmation that the financial momentum of Dynamic Drill and Blast after their acquisition of Orlando has continued, and if it does continue, the company's valuation at $50 million is looking again quite attractive. That's all I have for this September quarterly Appendix 4C video for Dynamic Drill and Blast. Yes, receipts were up 264% and operating cash flow was up 471%. But there was a reason behind it, and that reason was the acquisition of Orlando. It really has put a bit of a rocker up their receipts and their operating cash flow. And as a shareholder, I do hope that can continue in the future. If you have any questions about this company or any other company on the ASX, please leave a comment, your thoughts, or a question in the comment section of this video. Otherwise, I'm not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.